ただいま
Welcome everyone to the Nissan financial results for the third quarter of fiscal year 2023. We would like to begin the results announcement. Today's attendee is our CFO, Mr. Stephen Ma. Please go ahead. Mr. Ma, CFO, will give you the results. Please go ahead.
Thank you, Hamagu-san. Ladies and gentlemen, welcome to Nissan's third quarter result for the 9 months ending December 31st, 2023. Before addressing our results, I want to express my condolences for everyone impacted by the Noto earthquake. Our thoughts are with the families, friends, and the communities affected. I also want to thank the entire Nissan team and partners for delivering steady results in the face of challenges. Let me begin with our third quarter highlights. Nissan delivered significant improvement on several measures. Net revenue increased by 22%, operating profit rose by 65%, and net income more than doubled year-over-year. We have been encouraged by rising consumer demands for our products, and we have enhanced shareholder return by restoring the interim dividend and buying back shares. I will now turn to our third quarter results in detail. For the 9-month period, global retail sales rose by 1.2% year-over-year to 2.44 million units. Excluding China, we achieved growth of 20% as demand improved in key regions, including Japan, North America, and Europe. Unit sales in Japan rose by 8.4%, North America by 30%, and Europe by 17%. This helped offset the challenging market condition in China, where retail sales declined by 35%. In terms of production, global output is flat versus last year. However, excluding China, production rose by 21% to meet the rising consumer demand. During the latest quarter, global retail sales decreased by 2.7% to 819,000 units. While excluding China, unit sales increased by 15% and production rose by 13% amidst demand for new models. Globally, quarterly production volume were 843,000 units. Though the third quarter volume was slower, our countermeasures to improve logistics capacity and the start of new model deliveries to dealership have already shown a positive impact on our sales performance in January. Therefore, we are confident to increase our sales in Q4. This slide shows our key financial performance indicators on both an equity basis and on a proportional basis. On an equity basis, net revenue increased by 22% to 9.17 trillion yen for the 9-month period. On the same basis, operating profit for the period increased to 478 billion yen, with a solid operating margin of 5.2% and an improved automotive segment profit of 241 billion yen. Net income totaled to 325 billion yen, and free cash flow for the automotive business rose to 182 billion yen. Net cash was at a healthy 1.33 trillion yen, even after restoration of our interim dividend and the share buyback from Renault. On a proportional basis, including contribution from our China operation, net revenue rose to 9.8 trillion yen. Operating profit was 487 billion yen, representing an operating margin of 5%. Given the fast-changing market condition, this is a solid performance. In the home market of Japan, retail sales increased by 8.4% to 336,000 units. The main driver was the demand for the Serena, X-Trail, Sakura, and Days, especially the e-POWER versions of these models. The proportion of electrified models sold in Japan is more than half our sale at 53%. Net revenue per unit increased by 13%, and production volume increased by 28.4% to 551,000 units. Nissan has continued to win awards for innovations, including Japan's Technology Car of the Year award for the Serena. In North America, overall sales increased by a solid 30% to 917,000 units. In the US, total sales increased by 25% to 663,000 units. This reflected stronger demand for the Rogue, Kicks, Sentra, and Versa. North American production increased by 33% to 913,000 units. Net revenue per unit in the US declined by 6%. This was mainly due to a model mix change as market moved to more affordable segments and an increase in sales expense aimed at keeping our relative competitiveness in the face of escalating incentives by competitors. We are confident that Q4 will experience increase in sales led by the new model year 24 Rogue, as well as improved availability of models like Sentra and Versa as we improve logistics capacity. In Mexico, the company's fourth largest market, Nissan remains the leader for the 15th consecutive year. Turning to Europe, retail sales increased by 17% to 244,000 units. This improvement was driven by demand for our Qashqai, X-Trail, and Juke, and especially for the electrified versions of these cars. As a result, the share of electrified models were nearly half of our total sales in Europe at 48%. Net revenue per unit increased by 8%, and production volume increased by 17.8% to 244,000 units. Turning to China, the competition continues to be intense. There's a 26% fall in 9-month retail sales at 547,000 units, and we have responded with focused actions to help mitigate some of the industry challenges and enhance Nissan's competitiveness, including adjusting our incentives. In the fourth quarter of the calendar year, unit sales rose 19% year-over-year to 247,000 vehicles. Production also rose by 33%. The stronger fourth quarter performance meant that the calendar year retail sales reached 794,000 units, which is in line with our previous forecast. Nissan Sylphy has been a top-selling ICE model in the segment for 4 consecutive years, with cumulative sales of more than 5 million units. Net revenue per unit for the period decreased by 8%. We are encouraged by the good sales in January, and we will continue to execute plans to strengthen our China performance. Turning to our 9-month financial performance. Net revenue increased by 1.67 trillion yen to 9.17 trillion yen. Operating profit increased by 188 billion yen to 478 billion yen, representing an operating margin of 5.2%. Non-operating income, which includes equity method company, totaled 62 billion yen. Our results were impacted by extraordinary losses of 98 billion yen, which included impairment costs associated with restructuring in India. Despite that, net income increased by 210 billion yen to 325 billion yen. This slide shows the variance factors in the third quarter year-to-date. Foreign exchange had a negative impact of 6.4 billion yen. Although the US dollar remained strong, this was offset by emerging market currency and the effects on hyperinflation in Argentina. Raw material costs decreased, mainly due to steel and aluminum over the 9-month period. Our sales performance had a positive impact of 312 billion yen. This reflected strong volume and pricing actions, partly offset by normalizing selling expenses across the industry. Monozukuri costs had a negative impact of 80 billion yen, which reflected retroactive payment to suppliers, inflationary pressures, logistics costs, and regulatory expenses. Other items had total negative impact of 82 billion yen. This included effects of normalizing used car prices and net credit losses in sales finance, as well as other items. In this environment, our operating profit improved to 478 billion yen due to our steady focus on Nissan Next strategic plan for long-term sustainable growth. Now I will turn to the outlook for the current fiscal year. Based on our retail sales performance in the first 9 months of the year, we have adjusted our volume outlook. We are managing the business by executing our strategy with discipline and have therefore adjusted downward our forecast for retail sales volume to 3.55 million units. This reflects challenges, including intensifying competition and logistics issues in most of our key markets. In China, sales reached 794,000 units, which is in line with our previous expectations. Nissan continues to focus on meeting customer demand with new models to improve sales efficiency while addressing logistics challenges and intensifying competition. In the fourth quarter of the fiscal year, we expect to see sizable improvements. Although the market remains competitive, we are taking appropriate action to navigate the challenging conditions, and we are on the right track. We are keeping our guidance unchanged for net revenue, operating profit, and net income. This reflects the underlying strengths of our business achieved during the Nissan Next plan. However, we also recognize the uncertain environment in which we are operating, and we are taking necessary actions. We are currently evaluating the full impact of the Noto earthquake and geopolitical issues around the Red Sea. While we continue to assess these issues, we are keeping our guidance unchanged. In summary, these results have been achieved against a background of market volatility and fast-changing industry conditions. The strategic actions during the Nissan Next plan have made our company more agile and resilient. With these strong fundamentals, we are better positioned to navigate challenges and aim for long-term sustainable growth. We are also pleased by the strong reception of our new product as we continue our transition to electrification. To maintain our progress, we are finalizing a new midterm plan, which we will announce before the end of March. Thank you for your attention. I will now take your questions.
Okay, thank you for listening. Okay, we would like to start the Q&A session. If you please limit the number of questions to 2 per person. If you have a question, please raise your virtual hand on the Zoom system. We'll call your name. When you are asking your question, please switch on your microphone and camera, and once you see your face on the screen, please start asking your question. Your face will only be seen by the people who are joining the system. Okay, we would like to start the Q&A. Who is raising the hand first? Asahi Shimbun, Kondo-san. Yes, go ahead, Kondo-san. Do you hear me? This is Kondo of Asahi Shimbun. Yes, go ahead. Yes. Global sales volume and Renault's Ampere IPO was cancelled. And these are the 2 questions that I would like to ask you. The first one is about global sales performance. In the beginning of this year, you shot for 4 million, but this was revised downward to 3.7 million. Today, you are bringing it down to 3.55 million units. Supply issue of semiconductor has been solved, but sales is not gaining momentum. You are not achieving the sales target, which you have set forth initially. How do you analyze it? How do you see the situation, and how are you going to address this challenge? And the second question, Renault the other day announced to cancel the IPO of Ampere, by the way. So how do you perceive this change in the strategy by Renault? Including the amount of investment Ampere, will this mean that you need to revise your strategy of EV or electrification? That's all from me. Thank you.
Thank you, Kono-san. Thank you for your 2 questions. So, as I mentioned, we are managing our business with discipline and very careful execution of what we have planned in Nissan Next in terms of principle, how to manage a business. And therefore, in light of that, and especially given what's happening in China, we have revised down our full-year forecast. This reflects challenges including intensifying competition and logistics issues around our key markets. So more specifically, I think in the US, we have been taking it down slightly versus the number we had in November, mainly due to the congestions we had in logistics between the US and Mexico. So we were not able to get our cars to the market at the right time with enough volume. So to address this issue, we actually have been able to secure more capacity via land and also via sea for the fourth quarter. So as we are talking right now, we are already delivering the very nicely new model year 24 Rogue and Sentra, and they're already in the dealership. So we are expecting to see quite a bit of improvement in Q4 in the US market. So Q3 was mainly the availability in US. So in Japan, in Q3, actually our sales is on track. It's improving roughly 4% versus last year, Q3. So it's on a healthy growth. And as you remember, first half we had some supply shortages in Japan. We were hoping to recover most of that in Q3, but the recovery was not fully as expected. In addition, we actually had a lot of customers who like our cars very much, and they wanted to wait for the new Note and Days, which just arrived at dealerships. So we're already selling the new Days and Note in January, and the sales are at a good pace right now, already in January. So I'm not worried also about Japan in Q4. So US and Japan, we have a good action for Q4. And same thing for Europe. We had similar supply and logistics problem in Q3, but most of that have been resolved. Of course, given the situation now with the Red Sea and geopolitical issues in that region, we are monitoring very carefully. But we have a visibility that we should be also have good improvement versus Q3 in Europe market as well. So given what we know of these key markets, we want to give you a more realistic outlook of that full year volume. And as I mentioned also, we are still quantifying or to monitoring or assessing the full impact of the earthquake and the Red Sea transportation issues. So already we are considering what to do, and we are trying to mitigate as much as possible for Q4. For your other question, which is Ampere and the investment, let me say this. I think, first of all, we have a pretty good partnership with Renault, and things are working very well right now. And all of our collaboration projects with them are on track, especially the new compact EV, which will actually be developed by Ampere. So as we said before, the investment opportunity in Ampere is really complementary and strengthens Nissan's strategy in the European market as that market is moving towards electrification. So we will continue to discuss with Renault and to discuss what to do going forward. I'm looking forward to also more collaboration with them. Thank you.
Did that answer your question, Kondo-san? Yes, thank you. Okay, moving on to the next question. NHK, Noguchi-san, go ahead with your question. Yes, hello, this is Noguchi from NHK. And I have two questions as well. Starting with the first one, earlier you referred to this, which is about Noto Peninsula earthquake impact. Partially, you make adjustments on the production volume. That's what I'm aware of, like part supply is delayed and all, so that's what I understand. Where are you with the production adjustment as of, and what's the visibility going forward when it comes to the part supplies? Could you elaborate on this point? That's my first question. And there's another question. The spring labor bargaining, how are you going to approach this? The other day, there was an announcement saying that the labor union of Nissan Motor will demand a record monthly pay increase. It's a draft now. That has been publicized, right? And now the prices are rising across the board, and wage increase is what the entire society is paying attention to. So what's Nissan's approach to spring labor offensive? These are the two questions. Thank you, sir.
Thank you, Noguchi-san. So as mentioned, first I want to express my condolences to all the people who are impacted by the Noto earthquake, and our thoughts are with everybody who are affected. So our production facility in Japan, Nissan, are operating as scheduled in February. And we are making some minor production adjustment on some models in February because of this. We don't yet have a full estimation of the total impact yet. We are still very carefully monitoring the situation. But for our majority of our Q4 sales, we have enough in terms of making the production and the sales to meet those numbers. So we will look at really the full impact. I'm guessing the more impact will come from delayed impact going to the future months as the whole supply chain is affected. The second question is about the wage increase. As always, we are entering into the spring negotiations, and we have, as always, reviewed and revised wages comprehensively, taking into account all the impact of price fluctuations, cost of living, and other factors. And this doesn't change. And we are looking very much forward to discussing and working with our union partners. Thank you.
Okay, thank you so much. Yes, thank you. Moving on to the next question. Nikkei Shimbun, Kawakami-san, please. Kawakami-san. This is Kawakami speaking. Thank you for the presentation, Mr. Ma. I have two questions. The first one is about North America. Lately, American car makers, the EV is slowing down in the entire market, but the hybrid sales are very strong. And there's a big gap between Nissan and the rest of the competition, because including the mix improvement. Going forward, how are you going to approach the US market? That's my first question. And the second one is about China. You are picking up your sales. But this fiscal year, the new cars were introduced, and how was the impact of the new cars that were introduced recently this year? And how are you going to reverse this trend going forward? Thank you.
Oh, thank you, Kawakami-san. So for US, currently our outlook for US, based on what we're hearing from various analysts and experts, U.S. market seem to be still going on very strong, and they might be able to avoid a recession, or at worst, maybe have a mild recession. So demand is still very strong. But the high interest rate inflation is sort of hampering the affordability of the customers. So we are focused on making sure that we bring the right vehicles in those right segments to the customer. But your question is more about EVs and hybrids, if my understanding is correct. And yes, as we always said throughout the last few years in our electrification strategy, the customer decides the speed of electrification. So we are trying to make sure we provide the offering to customer when they want to buy a car and choose a car. So for us, EV electrification growth is not a linear growth, meaning it's not a straight line. It will go up and down, but long term it will grow. So given the long-term growth prospects, we are also right now investing into making sure we bring the right product to the market. For the currently, as of now, we are focusing for the short term to help making sure that the Leaf and the Aria, which are our EV offerings in the market, will succeed. And we are using that to meet the EV demand in the US market. And for longer term, we want to make sure that we are working on bringing more innovations to our electrified powertrains, so we can provide the right combination of value and technology and performance to our customers. So we are discussing to bring more products and options to the US market. For China, your question is about the sales and the plan and the progress of a new model. So as you saw, we aim to stay in China, and we want to be a relevant player and a sizable player in China. So we make sure that we adjusted our go-to-market strategies, and we shifted our tactics to be more focus on key segments and key geographies within China. And this adjustment in our sales strategy paid good result in Q4, as you can see by the growth. So I think we are on a good track, and from what I've seen in January sales, also very encouraging results. So we are on a good path so far, and I believe the last 4, even maybe 5 months, we have consecutively month-over-month growth, which is a good encouraging sign. As for the new vehicles, right now we have launched new ICE vehicles, and they're doing okay, and people are starting to accept them more, including the extra e-power. So customers are starting to understand the product, and also the sales are improving. For the new energy vehicle that we mentioned last time, those will come, the first one will come later in this year. So they have not yet been launched. So that will come later in this calendar year. So we have a plan for China, and we are expecting to execute that plan. And so we ask that you be patient and you can watch our result. Thank you very much.
Okay, thank you so much.
続いて参りたいと思います。
Next question. Mizuno-san, Yomiuri Newspaper, please go ahead. Mizuno of Yomiuri Newspaper, can you hear me? Yes. I have 2 questions, Mr. Ma. First, China. We have been cut off, but there has been a significant drop year on year, but in January, 40% growth had been achieved. What were the reasons behind? What was the strategy that had led to this good result for January? Is this one-time off trend, or what is the mid to long-term outlook? Second, U.S. business environment. The former President Trump may win the upcoming presidential election. If that happens, what would be the strategy of Nissan? Or how will you be prepared for the second Trump administration? Those are my 2 questions. Thank you.
Thank you, Mizuno-san. So for China, as I mentioned, we changed and we updated and refined our go-to-market strategy. So we focus on very key segments and very key geographies where the customers are still very, very much valuing the quality, the values of Nissan brand vehicles. And that strategy, we went to those markets with enhanced competitiveness in terms of the net pricing. So that seemed to play very well with the market, and we were able to regain the share in many key geography where the electrification, as you know, on the coast side or the major city were faster, but on the inland or other provinces or in tier 3 or 4 or 5, where there's less electrification, we were able to regain a lot of our sales in those markets. And the customers obviously appreciated the offers, and we were able to see improved sales. So that's really what happened in Q4. And we are continuing this strategy in Q1, and it seemed to be also working very well. So that's for China. For U.S. presidential election, please, you have to forgive me, but I don't think we should be commenting on politics. So I will refrain from commenting on what will happen based on policy or politics. But for us, as always, Nissan will make sure we will adapt to whatever changes in the environment in the market. And I think after we have changed the culture and the business way of doing things within Nissan under the Nissan Next plan, we are much more agile and responsive to any market changes. So however the market change or policy change or whatever might come, we will make sure we are agile and respond appropriately and accordingly to the market. Thank you, Mr. San.
はい、 ありがとうございます。
Okay, thank you. Moving on to Toyo Keizai. Inoue-san. Go ahead, Inoue-san of Toyo Keizai. Yes, do you hear me? Yes, we do. Toyo Keizai, Inoue speaking. I have two questions too. The first one is about the production. Compared to last year, this year, semiconductor supply issue has been resolved and sales are growing, I believe. But immediately, there are production bottlenecks that you continue to face. Are you getting rid of the backlog already, or is it increasing? Which is it? Could you give us the status of the backlog? And the second one is this year, the full year guidance, the volume compared to last time was revised downward. But on the other hand, the profit remains unchanged. Financials remains unchanged. What's behind these numbers? Thank you.
Sure. Thank you, Inu-san, for the question. So production, as you mentioned, the semiconductor supply issue has improved significantly. So we're no longer as affected by that issue. So almost resolved. There are once in a while some bottlenecks or certain key parts or certain critical parts for us. But these are getting smaller and smaller, so it's almost resolved. As a result, we had, as you pointed out, many back orders from customers in some key markets, especially in Japan and in Europe. And as we are improving the supply, we've been able to fulfill some of those orders, and so the backlog is reducing and it's getting better. And also in Japan, I believe we have reopened orders for many vehicles, whereas before we couldn't. So the situation is improving quite nicely. And I think in Q4, I think the supply is getting much better. So I'm quite encouraged by what I already see in January in terms of some of the situation in terms of supply. For the full year, the question is about why volume is down, but the profit remains unchanged. So the profit estimation, of course, the volume has some negative impact as we reduce the full year volume. So it has some negative impact. But we were able to offset via two other factors. One, I didn't mention it clearly, but in the notes you can see we updated the yen assumption, FX assumption in Q4 to more realistic 145 yen to the dollars. So that will give us a little bit positive contribution. And secondly is we also have been making sure that with the volume down, we also try to limit any inflationary cost increase or keeping strict and disciplined management of our costs or in all the areas. So we were able to not spend as much, but spending in the right areas like R&D and marketing, etc. We are making sure we spend it, but other area we're making sure that we don't spend as much as we originally thought we would. So that's the simple answer to your question. That's how we were able to control the profit, but even though the volume is down a little bit.
はい、ありがとう。
Okay, thank you so much. Last question from the floor. Nikkei BP, Yaku-san, please. Yaku-san. Yes, hello. Earlier, you talk about electrifications. I have an additional question about electrification. Battery EV is in transition and hybrid is growing globally significantly. But in your case, you have e-power version. What's the sales performance of e-power equipped vehicles? Because in the case of Nissan, including BEV, you show us the electrification ratio in Japan and Europe. This includes e-power, right? And EVA. But what's the sales performance of e-power in each region, and how do you assess the situation? That's my question. Thank you.
Yeah, I think, thank you for the question. E-power, as you know, in Japan is very, very well received by customers. It's actually doing very well. The Serena e-power is, majority of Serena is by far e-power. And they choose, the customer really love the performance and the quietness and the value it brings. So it's doing fantastic. In Europe, we were able to offer extra e-power, Qashqai e-power, and also hybrid Juke in Europe, and those were especially popular with the market over there. So as far as e-power and hybrid in these markets, they're doing as we wished, and it's doing very well. In the U.S., as you pointed out, this change to hybrid was a more recent phenomenon. It's happened in the last few months, quite a bit of a change to hybrid as customers were worried about the EV certain points, and they wanted something in between, and therefore hybrid got better. So we are now studying what we can do for the US market as well. So please stay tuned. We will come back with some answer on what we could do with the hybrid in the US. Okay. For the other markets globally, we have already plans to introduce e-power to many other markets, and some of the markets they are enjoying very good support and benefits, and the reaction is very, very positive. In Latin and South America, for example, very, very strong positive reaction to our e-power introduction, that some of it already started and some of it will come more later in the year. So I would say e-power, where customers understand and they drive and they test drive it, they really like it, and that we have good plans for it going forward. Thank you.
はい。
Okay, thank you for asking many questions. With this, we would like to conclude the session. Thank you for joining.
Thank you.